In this video, I will be comparing two credit card companies, Visa and Mastercard. I will be assessing the companies in terms of their business, management, financials, valuation, and growth prospects. So do make sure you stick around to the end for this and for my final verdict. If you are interested in this type of content, then do like the video and subscribe for more. First, I will quickly jump into my stock valuation spreadsheet. This is a great tool to see a snapshot of any company and to then value it using different valuation methods. I have made a video on how to use this, so do check that out. The great thing about this is that you can quickly compare and contrast. As you can see, I have chosen Visa and Mastercard in my drop down, so I can quickly flip between the two. So first we have Mastercard. So just looking at their financials, we can see that their revenue has grown over the past 5 years over 10%, and their revenue is 31 billion with a profit margin of 45%. That is a really high profit margin, but I do believe that that is standard for this type of business. So if we look at Visa's, theirs is actually slightly higher. Visa's revenue growth is also slightly higher as well, but there's not too much difference between the two, so it does look like that they are performing similarly in this aspect. And if we look at their key metrics, firstly I'll go to Mastercard. We can see that the PE ratio is just slightly above 30 and a forward PE of 27. And if we look at Visa's PE ratio and forward PE ratio, it's actually slightly lower, so that is quite a low forward PE ratio of 22 for a company like Visa, so it does mean that it is potentially undervalued. If we go back to Mastercard, we can see their current ratio is above 1 and their long-term debt to equity is quite high, so it's above 2. So usually I like to see this below 1, but this is quite high. And their price to free cash flow is around 28. So from a cash flow perspective, it does look like it is around fair value or potentially nearing undervalued. So usually I'd like to see this around 20 if it was undervalued from this aspect. But if we take a look at Visa, we can see that their price to free cash flow is similar as well, and their long-term debt to equity is below 1. So I do prefer these sort of metrics here, and especially the forward PE ratio for Visa. And then in terms of the return on assets, equity and invested capital, we can see that this is well in the double digits for Visa. And if I looked at Mastercard, it does look similar, but we can see the return on equity has been much more impressive. So that's 185%, which is really impressive. And Visa's is only around 51%, which is still impressive. But obviously Mastercard has the upper hand here. And if we look at it from a technical perspective, we can see that the company is down 13% from its 52-week high. So it could potentially mean that it's a good time to buy. But obviously you'd have to do a discounted cash flow valuation or any of the other valuation methods as well to see if it truly is undervalued. And for Mastercard, we can see that from its 52-week high, it is down around 11%. So we can see that both companies are moving in a similar sort of direction, and both companies also pay a dividend as well. So Mastercard here pays a dividend and their payout ratio is 19%. So that's obviously got a lot more room to grow. With Visa, we can see the payout ratio is slightly higher, but not too higher, and it's around 23%. And it also has a similar dividend yield as well. And so since I'm in Visa, I'm just going to look at their earnings. So we can see their revenue surprise is 0.4%, and quarter on quarter it's 11%, whereas the earnings per share was a higher surprise on the full year, but on the quarter it was slightly down from analyst expectations. But I wouldn't say this is anything to worry about. And if we look at Mastercard, we can see a much better story, especially on the quarters. So we can see their revenue has grown quarter over quarter, I believe a bit more than Visa, and also their earnings per share has beat expectations by 23%, so that's really impressive for Mastercard. So on a quarterly basis, Mastercard seems to be performing better in terms of their earnings. And again, we've got the year-to-date performance of the company, so I did mention that both are slightly down, and we can see year-to-date it's down around 6% for Mastercard, and for Visa the year-to-date is down around 7%. So like I said, they are both moving in similar sort of fashion. So now I will compare the companies in terms of the business criteria that I set out at the beginning of the video. First up is the business quality. Both companies are a duopoly, so you can't really go too wrong with either. In this section though, I would give the edge to Visa because it generally has a larger transaction volume and a broader scale, and as we have seen, it also has better margins than Mastercard in terms of its operating margin and also its net profit as well. Now we will look at management and strategy. Mastercard is focusing more into higher growth aspects of its business, such as cybersecurity and data services. It is also more capital efficient, as we saw with a higher return on invested capital. For these reasons, I give the edge to Mastercard. In terms of financials, I give the edge to Visa due to it having larger free cash flow, stronger margins, and more conservative leverage. This all obviously ensures financial resilience for the company, which also translates to shareholder returns. In terms of valuation, currently Visa is trading at a lower PE ratio, and the price to free cash flow is similar for both companies. You can use my stock valuation spreadsheet to more accurately value the company based on your own assumptions, but from a first glance I give the edge to Visa in this section. In terms of growth potential, I believe Mastercard is the clear winner here due to analysts expecting higher earnings per share. Also, as we saw, the return on equity was really impressive. So after reviewing all these criteria, my final verdict is that Visa is currently the better performing company at a more attractive valuation. However, Mastercard has more growth potential and therefore slightly more risky for potential higher long-term returns. Which company you decide to pick will depend on how you value the criteria that I have mentioned and what type of investor you are. For me personally, I value Visa as it is the slightly more safer stock, but like I mentioned, you can't really go wrong with either, and if you really can't decide between the two, maybe just invest in both. This was a quick overview of both companies, so do make sure you do your own due diligence and properly review the company, and the tools in this video will help you come to a sensible valuation once you have done your research. So do check those out. All the links are in my description. If you are still here, I would really appreciate if you could like the video and subscribe to the channel.